Sandra Lastovic with the Mortgage Center in beautiful downtown Guelph. Welcome to another edition of Mortgage Monday. Today's topic is how a credit history is established and what are different mortgage lenders looking for. You may have heard of the two main credit agencies in Canada that help establish credit histories. They are TransUnion and Equifax. Equifax is the most common one that's used for mortgage lending. So how is a credit history established? Really, it's just a big algorithm. You may have seen that recent Netflix show on algorithms. It's pretty much just a big mathematical model. And there are three criteria that affect that algorithm. They are length, utilization, and payment history. So length is obvious. The longer you've had your credit history, the better the score. And the better the score, the more likely it is for you to get a better rate on your mortgage. Sometimes there's a false positive. I've seen people that have gotten their first credit card and have a really high credit score, but just because you have a high score doesn't mean anything. The next criteria that they look at is utilization, and is how the balances of the credit facilities versus the limits. So if you're not paying your credit cards and your lines of credit off every month, you want to make sure that the balances are at least half of the limit. The last thing that they look at, that the algorithm looks at, is a payment history. Obviously, you want to make sure that you pay your credit cards and lines of credit and even your mortgage on time or before. If you can't pay them off, it's extremely important to make a minimum payment. The rule of thumb is a beacon score that Equifax has over 680 is considered very good, and you can be guaranteed that you're going to get a great interest rate on your mortgage. So make sure you give us a call if you've had credit challenges in the past or are looking for other mortgage options versus your bank. Signing off now, Sandra with the Mortgage Center.